So, you're thinking about investing in Japanese property? Maybe buying a home or a vacation spot in Tokyo? You're probably seeing a lot of mixed signals out there. Well, today we're gonna cut right through all that noise. We're gonna focus on the single biggest force that's shaping Tokyo's real estate market right now. And it's a trend that starts in the office, but you'll see it ends right at your front door.
For the last couple of years, the big story around the world has been remote work, right? We all heard it. The office is dead, it's a thing of the past. But what if that's not the whole story? What if, in one of the biggest cities on the planet, the exact opposite is actually happening?
Yep, you heard that right. In Tokyo, the return to the office isn't just some small trend, it's a powerful economic engine. And as we're about to see, it's creating this massive ripple effect that any potential investor, like you, absolutely needs to get their head around. So where's the proof? Well, the story really starts with the commercial office market. It's making an incredibly strong comeback. Let's dive into the actual numbers.
First up, this number, 2.68%. That is the average office vacancy rate in Tokyo's central business district. Now, to put that in perspective for you, that is an extremely low number. It's a huge sign that offices are filling up, and they're filling up fast. In fact, this is the 7th month in a row that this rate has gone down.
And the momentum here is just undeniable. For 20 months straight, we're talking almost 2 years now, the average office rents in Tokyo have been going up. This is not some short-term blip. It is a sustained, powerful trend that shows demand is real and companies are literally competing for space.
And this is what they're willing to pay for it. Over 21,000 yen a month for what's called a tsubo of office space. A tsubo is just a Japanese unit of measurement. It's about 3.3 square meters, or roughly 35 square feet. This proves that companies aren't just leasing space, they are pouring serious money into it. But this is where the story gets a little more complex. You see, this big recovery isn't lifting every boat equally. There's this really powerful trend emerging called polarization. The market is basically splitting right down the middle. Just take a look at this chart. The vacancy rate in the central 5 wards, the big business hubs like Shiota and Shibuya, it's a tiny 1.42%. Now compare that to the other 18 wards, where it's more than double that. The message from the market couldn't be clearer. Location is everything.
And it's not just about where an office is, it's also about what kind of office it is. We're seeing the exact same pattern with the quality of the buildings. These large, modern buildings have a much lower vacancy rate than the smaller, older ones. Companies are very actively choosing quality. So, why this laser focus on these premium spaces? Well, it's all strategic. In a tight job market, a top-tier office helps you attract and keep the best people. It's about having modern facilities, easy commutes, and, this is a big one, disaster readiness. It's known as a business continuity plan, or BCP, super important in a place like Japan. It ensures a company can keep running even after something like an earthquake. So this is about way more than just desks. It's an investment in people and in resilience.
Okay, so this brings us to the big question. How does a booming office market affect you as a potential home buyer or a residential investor? This is where the story pivots from the boardroom right into the living room.
This simple sentence from our source material just nails the connection. I mean, think about it. If more and more people are commuting to these central, high-quality offices every day, where are they going to want to live? They'll want to be somewhere that makes that commute easy. It's a direct cause and effect relationship.
And here's the proof, clear as day. While rents for homes are up across all of Japan, just look at the Tokyo metro area, an 8.6% increase year over year. That is nearly double the national average. This isn't an accident. This is that return to office trend directly pumping up demand for housing in and around the city. Okay, so let's pull all these pieces together. If you're looking at getting into the Tokyo market, what is the single most important takeaway from all of this data? It's this one idea, market polarization. The market is splitting. All the demand, all the money is getting super concentrated on the best of the best, whether that's a brand new office building or an apartment in a fantastic location, while the lesser assets might even struggle. Not all properties are riding this wave equally.
So, if you remember just one thing from this explainer, let it be this. The powerful return to office culture is the fundamental engine driving both the commercial and the residential real estate markets in Tokyo. Understanding that force and its polarizing effect is really the key to navigating this market successfully.
And that leaves us with a big, forward-looking question for every investor out there. As this gap between the premium properties and the secondary ones just keeps getting wider, what does a smart investment actually look like? Is it all about paying top dollar for a top-tier property, or is there some hidden value to be found somewhere else? That is the core strategic question in Tokyo's market today.